computer. This is the first time I'm recording on Zoom. All right. All right. So, we're going to do this like how we always do it. So today you guys want to go over credit spreads on shorter time frames. Is that correct?
Yeah.
All right, cool. Let's go over to what I usually do is I usually do it on SPX. And I do it for a very particular reason. The data is really high. So with the data being so high, the contracts.
Your volume is fading out.
Oh, can you hear me better now?
Yeah.
Slide over to the left. I think that's what more so what the microphone is.
No, we lost you again.
Oh, then I guess it's just my internet service. Can you hear
Okay, I can hear you, but you just become really faint.
me? Call it with this internet. It's temperamental at times.
Okay.
Can you hear me now?
Uh-huh.
Okay. All right, cool. So we're gonna go over the SBX. So the main strategy is to really make sure which direction it's going, because that you want to be certain of. So I like when things are oversold, like on like say like the 15 minute, or even you can even like they say the 15 minute. Things are overbought right now, right? On the SPX.
Mm-hmm.
Um, so let's say we're going to be day trading this, right? And you want to do it somewhere close to at the money so that you can get more premium. The thing is with this, we're not trying to go for the gusto and hold it all day. Now, if it goes for a big move, like say how this was overbought here, and on the 15 minute, we said, all right, we see that happening. So we go down to the 5 minute and let's look at what time that was. Let's do a vertical line over there and see if the 5 minute is also oversold, overbought. But we see the 15 minute overbought right here. Let's go on the 15 minutes, the 5 minute was already overbought around the same time, right? So as this is going up into overbought, we're going to move it over just a little bit more. On that 5 minute, we've seen it overbought as well, starting to curl over. So that being said, we know this is coming down sooner than later. I'm gonna show you something like I just played. I played a paper money on a 1 minute on ES. I'm gonna show you guys that in just a second. But the 15 minute was overbought. The 5 minute is overbought. What's the likelihood of this going up some more before it goes down? Like it's coming down, right? So that being said, you can take a SPX at the money, put credit spread for the same day, and as it's turning down and coming down, you'll be making money. The faster it comes down, even better. Because you're at the money, these things are going to deteriorate faster as it goes again away from you. So we would do a call credit spread here. And like I say, 399, 398, somewhere close. And you'd be making, let's say you did a $5 credit. It's even better if you do a $10 credit spread, but if you did a $5 credit spread, you'd probably be making out of the $5, probably about like say 190, $2, and risking the three. Instead of what we normally do, where we'll sell it way out here and we're trying to make 30 cents, 40 cents, and risking $4.50. So here
Mm-hmm.
we're bringing in more premium, but we're more directional based. So we're looking for a price to go away from us. That way we can collect the premium faster. Now, if it makes an extreme move like this, like I said, on the 15 minute, we seen it. Like it was going to turn around. Now we don't know how long it's going to turn around, but when it starts pushing, and we don't really have to like watch it every second, because we're like, it's going down and that premium is looking real nice as it deteriorates and keeping more money in your pocket. This is where you can a quick like 20%, 15%, even 30%, even say, hey, you know what? I want this to go to maybe about 50%, take that money and move. Now, this is a particular strategy that some real big money people put on, and they are looking to make like 5%, but they're putting on like $5 million. And when they put on the 5 million, they're just looking to make like 5%, 6%.
Mm-hmm.
So as prices is going away from them, they're making that so fast. It's like within a matter of minutes, they're just made, $300,000. It's crazy, but it happens. So by timing this market and throwing on the credit spread, you're doing well. Now, could you have done a put? Sure. But if it starts playing around, then that's when you start losing the money. And with SPX, you're losing money faster than you're making it, unless it's going in your direction. So you can do the at the money when you see these extremes. So I love to see them, like even like right here on the 5, right? You can see this curling up. It's got to go up sometime. As it's going away from you, you can do the premium closer to the money, and as it's going away from you, just collect the money. But I would rather see
So,
the time frame too, though. Like if I would see this oversold, I want to see like the 15-minute oversold as well. And then as this is curling, I can jump on the premium. Yeah. What's the question?
so what do you look for in addition to just those overbought or oversold areas? Are you waiting for your
Okay.
EMAs to cross,
Not
or
the EMAs per se. So with this one, you can actually turn off the EMAs, right? You don't really need the EMAs for this particular strategy because you're looking at the overbought and oversold conditions of probably the stochastic, and then wait to curl over. Now, for me, for extra confirmation, I'm looking at my Hakanashi candles, right? Let me zoom in on this area here. I'm seeing how I have strong Hakanashi candles coming up, then they're getting weak. We're at overbought. It's starting to turn over. I'll take it. Now we have some consolidation here. I wouldn't be too worried about it because once again, the 15-minute is also well overbought, looking to turn around. So it's one of those, got to be patient. Now, if you want to wait until you get confirmation, as far as like it start to turn over, and maybe this would be a consolidation breakout right here. So we got this consolidation. You see it. You say, all right, I just want to wait to see the whole thing curl over. You could do the actual consolidation breakout and wait for it to break out here. You can also do we were in a little bit of an uptrend here. Then we had a lower high here. You can wait for it to break here. So you can wait for a pattern to show itself that it wants to go down. But I like to see the stochastic come back down into no man's land. And then I could say, yeah, this thing is about to come down, especially because of the bigger time frame at that time. And I know I'm not going to be in this. This is a daytime scalp, daytime credit spread. So I'm not looking for a big move. I'm just needed to move away from me for a little bit so I can make my money and keep it moving and still feel safe.
So I see that it's at the end of the day. Will that contract expire at the end of the day anyway?
It will but on these time frames I'd be very careful with that because it could be oversold on the 15-minute now, it'd be 10 o'clock, but by the time 3-4 o'clock come, it could have turned back around and came up. So you really got to be careful with that. This is more of like you scalping the credit spreads.
Okay.
It's like you're trying to take your money and go. Now, if you're going to try to do something, end of the day, that's when we go to the 15-minute and the hourly. And look at that hourly, see what it's looking like in the 15-minute. When they agree, then you can take those trades. I love to see the hourly like oversold and in the 15-minute oversold at the same time, because when that 15-minute start to curl up, now we're talking about like a end of the day holding it type of situation, because it's more likely that both of them are going to, like, say both of them are oversold, the 15 and hourly, it's a higher likelihood that they're going to continue to go up for a couple, maybe for the next, 2, 3, 4 hours, which is most of the day. Matter of fact, let's go to SPY. Let's go to SPY because that's what happened yesterday. I don't know if you guys were on the call when it was maybe like Bucky was on, and I told everybody to be careful because we had a bullish divergence on the hourly. So we had price action lower. Price action was going down. We were getting lower lows than here. Previous low was here, lower low here. Matching it with our MACD, the MACD was going higher. So I was like, just be careful. And then the next day, which was this yesterday morning, it gapped down. I was like, all right, still wants to go down. But as you can see, it was oversold at that point in time, first thing in the morning, right? On the stochastic. With the bullish divergence still happening. Now, with the bullish divergence, if you want to get in, I would wait until the MACD changes momentum. So it changed momentum at 12:30. And I didn't catch this move, but I wish I did. I had went and took a nap, but I should have had an alert on for the MACD turning up. So this turned up. Let's look at the 15-minute at that same time frame. Let's see if that was oversold as well. Well, I'm pretty sure it was, because we had that drop in the morning. So the drop in the morning was here at 3:30, 3:45. So 9:30, 10 o'clock in the morning, we was coming out of oversold here. And on the hourly, we were already oversold from the night before, the day before as well. So that telling you both of those are oversold is a higher likelihood. They got to come turn around. And the 15-minute is going to turn around before the hourly, which is going to push the hourly up. So as that's going up, guess what we do? So this was an easy call yesterday about, 11:30, 12 o'clock to do a put credit spread and go for the rest of the day. And this morning, and I got an hourly 6 and 17 crossover at the end of the day yesterday. And I actually took a SPX put credit spread right at the end of the day. So as long as this holds up today, I'll be fine. I could probably take it off first thing in the morning. I don't know if I'm gonna hold it all day, but I'm probably gonna take it off first thing in the morning because we're overbought on the stochastic on the 15-minute now. We're still getting there, so we still have room. By the time this market opens, I have a resistance level and a fib level right here at 399.38. So we may push up a little bit. We may even hold up there for a little while. Maybe for the first 2 hours or so. We start turning around, if we turn around, because this looks like an awkward W pattern trying to play out to the upside. So that's what I got going on with that. But I definitely like that. I'm happy with the put credit spread. Of course, I wish I would have took a call last night, but everything with the low 15-minute and everything being overbought, I was like, I'm not sure, so I'm not going to take it. But when my 6 or 17 cross, I'm supposed to just take it, and I broke my own rule. I'm supposed to take it and not ask any questions. Whatever happens, happens. But it is what it is. Any questions?
No,
We're good.
I think so.
Yeah. So you see, I see. Yeah. So those that there's a nice little jump on the thing on the with the stochastic. It's really easy to see those extremes and then try to catch some of those. Even if you're doing it on even for little plays like for scalps, I love to see these oversolds. And then I go just drop down to like the 5-minute. Let me see, there was something here. Even this right here, it's 3 o'clock on Wednesday. See, there was a nice move into the end of the day. You could have made some money, even if you made 10, 15, 20%. You go down to the lower time frame, 2-minute or the 1-minute on Wednesday at 3 o'clock and play the run up. Come out from oversold, hit a previous support level. The higher time frames were oversold. Then you just, for me, it's all Hakanashi style. I see these things on a higher time frame. I get this play off a bounce, I'm jumping in here. I'm going to make a couple of dollars. Because 30, 40 cents for me is a big deal.
Okay, so the whole idea is to scalp it. You're not looking for the big run or win with this one.
No.
Yeah,
you'd have to, if you wanna do it at the money, you're better off scalping it.
Okay.
That's my thought process on it. Because unless it's on the hourly, and then if you want to do it on the hourly, and you have like say on the hourly it's overbought or oversold and it's like 10 o'clock in the morning and you start to see it curl over, then you may be able to say, you know what, I can hold this. I should be able to hold this for the whole day. If you get a like right here, it was overbought at this is a lower time frame. Let's go to the hourly. What time of day it is? Okay, this is a good one. This is 12:30 on Thursday, January 19th. This is oversold. It started turning around, and you could have took at the money here, and as it's going up at the end of the day, you'd have been good to go. Overbought at 2:30, you could have took at the money, and see the at the monies, you'll get a whole, people are still buying, even though it's a 0 DTE, people are still buying and selling. So you getting to see these things turning around at 2:30. You can do it at the money and crush it. What time of day was this? This was a 3:30, so this was the next morning. This was a beautiful play for the next morning. What time was this? 9:30 in the morning. So this one was oversold 9:30 in the morning on January 31st. Caution candle with the indicator. Shout out to Cheat Code. You could have definitely played this one at the money as well and watch it just go up all day and laugh. So you can look at those hourlies and see, hey, where is it at? You can even set up to say, hey, I want to see when, let me know when SPX or SPY or Shopify or what have you is oversold. Let me know when it gets above the 80. So you can do that by setting an alert on the stochastic and saying, hey, when the stochastic crosses, let's say 80, I want to know. 80, and you do it once per bar close, so you know once it actually closes and the stochastic is above the 80, now you can say, okay, it's overbought. Let's make sure we keep an eye on this, you know, like every hour, start to see when it's turning over. And one little trick I used to do is once it crosses over the 80, okay, good. Now let me know when stochastic actually crosses back over itself. So the K line, which is the blue line, once it crosses that orange line going back down, let me know, thank you kindly. That way you also got your entry and you can create that as well.
So the K line to cross
the D line. Yep, the K line, that's the blue line, is going to cross over the D line. And that's going to tell you that, okay, it's starting to go down. And when you have a MACD confirmation also crossing, that happens at the same time, or if you see the MACD starting to weaken, that's definitely also a good sign. Now, this is not going to, you know, of course, nothing works 100% of the time, every time. Sometimes, you know, it'll pull back a little bit and then continue because this is counter trending. But a lot of times you're getting in, you know, almost at the top of a move, as we showed a couple of times here. Not every time it's going to work perfect, but when you have the stochastic and then the MACD following with momentum to the opposite side, it works out quite often, more than not.
Okay.
And sometimes get consolidation, and even this one, it was overbought, sat there for a while. This was a couple of hours. This one will end up being a couple of days before it broke down.
So with that, the benefit is the time decay is working in our favor.
Always. Time is a beautiful thing when you're selling contracts.
And so this varies from the other strategy where we were looking at the hour and 15 and then doing the delta 10.
Right. This is totally different.
We're going to just pick at the money or very close to being at the money.
Yeah, with a very good confirmation that this should go away from you.
Okay.
And you'll be making money faster.
Got it.
And you're not looking for big percentage on this one.
Okay.
So You mentioned that the big money is looking for 5%. So on our smaller contracts, if we're looking 10, 15, that's a
It's a possibility. It can happen. You know what's funny? I did it on Tesla, but I kind of played myself. I'm gonna tell you how I played myself. I did it on Tesla, but I didn't do it. I didn't scalp it. I actually held it. We had a big move up, and this
we lost you again.
oh, can you hear me now?
Yeah.
Okay, cool. I'm trying to remember what day it was. I think it was Tuesday or something. We had a nice push up. And I said, oh, okay, Tesla trying to make a move to the upside. And it did. And I did a put credit spread. Trying to see exactly what day that was. Either way. I assumed we was going to you know what? Let me throw my EMAs on. I think it was right in here. Or was it here? I don't know. It was this week. So it must have been like say Monday or Tuesday. So once it came up here, and I was like, all right, let's take a put credit spread because it's trying to push back to these levels. And I think it was on an hourly where I saw it. So I took it to the upside as far as my put credit spread, and I was up like 20%. And even though I saw it curling back over, I was like, this thing is going to push a little bit more. Yeah, this is what happens when you think you know what you know, but when you like, nah, you see it coming down, and you're like, nah, I'm gonna give it another. Nope, take your money, run. If it's starting to go against you, take your money and run. So I end up taking it at a loss yesterday, and I didn't even put a trailing stop on it because I had the contracts till today, till Friday, and I leave it alone because it was a 202. Sold the 202.5 and I bought the 200. So it was like a $2 spread. And I was bringing in, I think, $109 per contract out of the 250, which was fine with me.
And
So
we're always selling the strike price that's closest to
the price,
the
yes,
current price and buying
yes,
one furthest away.
the one furthest away. That way, that's the protection. That is the protection for you. So yeah. So I did that and messed up myself real good. But like I said, I was up 20%. I could have took it, but being overconfident on the move. Or was it this crossover on shoot? No, it was this week. I think it was a crossover and it was pushing up. But anyway, I could have took it for profit and then turn it into a loss. So, even though I be know what I'm doing sometimes, I still foolish moves. We all do. We all get a little ahead of ourselves at times, so we got to be careful with that. Shucks, I'm looking at Tesla right now. I'm not surprised in this move up. You see how it was oversold here on the hourly, hit a support level right here, and then look at the Hakanashis. It got tight. Doji. This thing is begging to come up. Like, please help me. Let me come on. Let me see what the daily look like. Is the daily still pushing down? Daily's still pushing down. So I'm gonna be looking for a little pop on this to maybe I'm looking for my 617 to get a little closer, maybe even to right in this area here where we've had some previous support, which is now going to be resistance. So, but we came up pretty high in 194 this morning. So we're going to see how it holds up for this next hour and a half before the market opens, and see if it does stay up in this level and continue to push, or if it turns back around.
Can you pull up Shopify?
Yes, Shopify. Yep, let's do it.
So on this one, I'll just tell you, I told you before we were doing the covered call strategy. So we actually are holding shares of this one and we're, kind of down right now. So we're trying to look for ways to, I guess, offset some of those losses. I mean, obviously the loss is not realized until we sell the shares, but wanted to see like how to incorporate the credit spread on this ticker. And so looking at
And we'll look at the option chain. Let's look at the option chain and see if the credit spread, because with credit spreads, you want tickers that have a higher price.
okay.
So the ones in the hundreds and stuff like that usually work out better because they give you better deals as far as like you're gonna get pennies on the dollar with these compared to SPX, where if you're doing like at the money, you're going to be making a whole lot more. And you want to do like 0 DTE, or you want to hold them like for days on end with the credit spreads for shop? You try monthly credit spreads or
Probably not holding it for very long. I don't know that my risk tolerance can stand that.
so even if you like these are good to buy. Like I don't like the implied volatility. Do they have earnings coming up? Look, let's take a look at shop. They just had earnings. They just had earnings on Wednesday, February 15th. Oh, this was 2 weeks ago.
Right. What? They did good and then it tanked. They were like, what the heck?
Yeah, the market is the market. This is a crazy market. This here has high, well, this is for today. I don't like the implied volatility on most of these, 57%, but that's fine. I mean, the
good range.
Prices are low.
What do you look for as far as the IV?
IVs, I like to see them under 40.
Under 40?
Yeah, but I mean, with these prices are so low for me, like $1.18 and stuff for 7 days. This is pretty good, and it has good open interest for the most part. So this is not a bad ticker to trade. Do you know how much it moves per day? Let's go find.
It can move to $2 to.
I'm gonna go to find the average true range on the daily. Let's pull that up real quick. We're gonna pull that up real quick. Yeah, like you said, $2. Oh man, this stock moved by $2-3 a day. Let me start trading shop. Let me start trading shop.
And it feels so bipolar right now.
It does some crazy stuff. It had nice earnings and then it just tanked. Oh my. You could have this one. All right, so for this one, there's gonna be puts in calls on this one for me. You can do credit spreads, but let's see. Let me show you what's going to happen when you do a credit spread on this, right? You do a credit spread at this, and let's say we do both at the money and out of the money. Do you see that the 9-12 delta? If we try to sell this here, let's say we're going to sell some puts, and we're going to hit the vertical. We're going to make 5 cents on this. Now this is a 50 cent. You're risking 45 cents to make, or $45 to make $5 on this trade. So you got to do a whole bunch of contracts and pay the commission fees for that, which to me is not viable. Now, if you did at the money and said, hey, it's at $41 and it's oversold right now on the daily, this may push up a little bit. Let me see what the hourly look like. The hourly is overbought, so I would still have to wait for the hourly to be oversold as well. So, we're going to have to wait for that to happen before we can make a move back to the upside. So this may still go down some more. This may just be momentum, because when stochastic sits down here, this can indicate momentum. But we'll see, because this is quite a while.
Yeah.
So we don't know. All we can do is wait and see what's going to happen. But this is definitely in the downtrend, so we're going to keep it to the downside. But let's just say we was thinking it was going up, and we're going to sell at the money, and with this one, we'd make $22 and be risking, this is holding it for 7 days now. We'd be, the max loss would be $28 and you'd bring in 22. So if we were certain, nothing is ever certain, but if we had a good vibe that it was going to be going up based on our technical indications, then you would have to probably put like 10 contracts in there, hold it for a week to make $220 if you held it all the way to the end.
Right.
That's that kind of stuff we can do on SPX in a day if we was doing that to money.
Gotcha.
So with this, these have some really good spreads as well. $3, 3-cent spreads on either side, holding it for a week, and we catch a nice move. This is something that you can buy out of the money and spend less money, and then if this thing actually gets in the money, double your money, 100% return on investment. So with Shopify, this is my, I am not a fiduciary and nor a financial advisor. This is this is only, this is just a thought that I am having, my personal thoughts that Shopify is more of a good candidate, even with the implied volatility. These prices and the fact that it moves $2, $3 a day, you can actually make some good money doing calls and puts. I think personally, we can make some good money doing calls and puts on Shopify, more so than credit spreads.
Okay. I think I just maybe need to spend a little more time with it. Because trying to play it, doing the calls and puts, I don't know, maybe my mindset needs to shift a little bit on how long I'm holding it, because I think it's just been so much like, oh, okay, we're doing the flushes, so I'm looking for it to move and then get out, versus just like, okay, I might have to consider just playing this on a higher time frame, looking at those charts to hold it.
I know you like the 15-minute.
Like if you look at that price action right there where you are, you see how all that consolidation that
this here?
And yeah, that chopped me up.
and it can, but and everything, everything is perception, right? So this is what I see. I see a bear flag, right? So we got the pole coming down here, and then here, I see a bear flag. Once it breaks, play it to the downside. Now it comes back. We have a consolidation breakout to the upside. This consolidates. So you could have made that move here for a couple of, for maybe about a good hour, made some money, make some money from here to here. That's almost about $1 move, which is decent. Then we had the consolidation here, breakout right here. Of course, you'd have been holding it in a little bit of this, but eventually it came and pushed up, and which would have made you some money too on Tuesday. Then we had a 6 and 17 cross, one of my favorites, 6 and 17 cross, which had a nice drop, pullback. Here's a nice entry. Let me throw on my squeeze and swing from the algo, from the cheap algo. Let's throw those on. Let me see how those would have shown up as well. Yeah, we had a nice 4 for 4 here, and this would have took you into the end of the day. If you would have held it overnight, it was a nice drop. But even at the end of the day, even from 10:45, this is a 50. I forgot this is a 15-minute chart. I'm so used to looking at like the lower time frames. But we caught a 4 for 4 here, whereas squeeze was going down. We got the red dot, sell signal. We rolled this down. Then we had another 6-17 cross with another 4 for 4 to the upside yesterday. Nice play to the upside. Money. There's money in Shopify. There's some money in Shopify. I think we can find some money in Shopify. I'm going to also play it, and then we're going to see. And don't forget, these fib lines that come for you, they're really good. You see how they be stopping right on these lines? The cheat code fib lines are pretty good. I'm starting to use them more and more. I haven't really used them, but I'm starting to use them more and more now recently, because when I chart my support and resistance lines, they pretty much match up quite a bit. So I'm starting to like them more. But there's money in Shopify. We can make some money in Shopify on the call side. They good prices right now. They're good prices, and Shopify overall is a really good company. I like it, so I might have to go buy some shares in there as well. You do what you want. I can't tell you to buy, hold, sell, but you do what you want with them.
No, I mean, the reason we had obviously picked them doing the cover call strategy because their premiums are pretty good at the beginning of the week.
Okay.
Today's, once market opens, they're gonna be pretty low. So I might look at it and see what we can do for today. Can you pull your stoke up?
Yep, absolutely.
Like it's oversold. I mean overbought right now. We're approaching that. Looking at the squeeze. Where it's coming down. Yeah.
It's already coming down and starting to curl back up. And
Yeah.
we're going to be up 18 cents. Well, if the market stays like this in the morning. Now, we're going to be up 18 cents, but we're going to be at resistance, right at resistance. So we got to watch that and see if it breaks through. Now, this has tapped this resistance area 2 times already. Let's see, it's been a support zone before as well. So if it breaks this level here, I'd be looking for, to fill the rest of this. I mean, this is a gap. Hold on, this looks like this was a gap here. Yes, it's halfway in the gap now. If it breaks this level, I would be looking for it to fill the rest of this gap. If it rejects, then we can play back down on 15-minute to this level here, which was the previous support here, which will also fall back into that consolidation zone that we had back here. So those are the 2 plays. If this resistance holds and starts to curl back down and everything to squeeze and the swings start to curl down, stochastics start to curl down, I would probably try to see if I can play it to the downside. Let me look on the hourly. The hourly looks like it's becoming overbought. Last time it was overbought, we saw what happened. And before that, when it was overbought, we saw what happened. This is what I love about the stochastic. Now, it doesn't work every time, but you can count. Your ratios are pretty skewed. The thing comes down, at least it comes down a little bit. You're gonna make some money when these things are overbought. You'll make some. So more times than none, and it has to come down eventually.
So when you're looking at current price right here, so the squeeze is showing prior to that, that's a regular divergence.
This was a regular divergence, yes. Yes. I would want to throw on my MACD for me to confirm, but this is the squeeze is the RSI and the MACD combined for like superpowers. So it's a little off. But it rides like with my MACD quite often, and yep, this was a bullish divergence on both the lines and on the histograms from the previous low. So
if you were looking to play this, then you would look for,
all jokes aside, as simple as the MACD crossing up on the second part of the divergence. I'm jumping in the trade.
Okay.
Because the momentum is changing. This is right now, this candle right here probably be a doji candle. Let me see something. Yep. So I got a caution candle doji. Next candle, bullish Hakanashi with no wick at the bottom, which is indicating bullish momentum. And on top of the fact that we had the bullish divergence, I'm taking the trade every time.
Right. So if you've missed your entry at this point, right? So had not jumped in already when you had your 6 and 17 crossing and all those things line up. So now we are where we are. So looking for this, then we would look for a break at the break and close above the 41.19
Yeah.
to go up, or the
Take your profits. No, no.
if you're in it, take your profit.
If you're in it, take your profits. I mean, you could. Once you start to see it turn over, already we're starting to see like the MACD is starting to decline a little bit, right? So it's showing some weakness, right?
So when you look at the hourly, no, not, I think that
Oh, what's the 15-minute?
the time frame you were looking at where on the Stoke, I think it was pointing up. I'm just trying to figure out at what point would you look to maybe do a put? Are we looking to cross the 40-55 line to close below?
So I like, yeah, okay. So for a put, I'm looking at it, right? So let's say you want to see if the stock is overbought right now, right? Let's see. Let me throw on the stochastic real quick and see if it's overbought. That it is, right? So now we're gonna go to the lower time frames and see what's going on in the lower time frames, right? Stochastic is not overbought yet. We'll see if it still has some pushes. Don't forget, it's going to be overbought once this market opens. It may come back into overbought because now we are higher pre-market. So we'll look for it to be overbought, and then we can even go down to the lower time frames than that and see how it reacts at this level, because that's exactly where it's going to be, right? So we're going to see how it reacts at this level on the lower time frames, because we know for a fact that on the hourly we are in overbought range. That doesn't mean it's going to go down immediately, but we're overbought. So within that first hour, we're going to see what's going to happen. Is it going to break? Is it going to get weak? And you should have your answer within that first hour, hour and a half.
Okay.
And if it starts to curl down on the lower time frames, we already know the hourly is overbought. That doesn't guarantee it's going to go down. It's going to go down sometime, but it doesn't guarantee it's going to go down right there. But for me, it's good enough to take a shot at it once I see it like curling over on the lower time frame. And if I'm correct, this looks like another bearish divergence here. This is what I love. That's what I love about the cheat code. So when we had this higher high, it showed that we was having a regular divergence, that it was getting weakened, and we had that nice little drop. And you could have played that on the 5 minutes. Then this is, like I said, this is scalping stuff, so that would have been a nice little move back to the EMAs. Now I think we're creating another one here. So you see how even though we're going to be going higher, the histograms are lower than these previous highs. So that in itself already showing me divergence kind of vibes.
Gotcha.
So I'm not expecting a huge move from this, but not to say that it can't, because when we have a divergence, and I always like to, y'all getting all kinds of juice today on you. When we have a divergence, when price is going higher, but the oscillators are showing lower momentum, it could just be pausing, consolidate before it actually breaks out to the upside, or it can actually reverse and turn down.
Yeah, price is going to do what it's going to do.
Price is going to do what it's going to do. Be prepared for both sides, and you will be all right.
Okay, that's good. I'm good.
It's got the credit spread aspect of it's like SPX, because it has everything you need, has the liquidity, and it has the push away that you once it gets in a direction, quite often it flows. It could go,
Yeah,
but it flows, and then you just see the money that's coming in so fast. It's just like, okay.
yeah. The thing with SPX, though, like yesterday, when you were talking about it, I think it was around 11:30 or so. We were talking about it. Yeah, 11:30 Central, and it looked like it was just starting to range a little bit, and then the sucker shot straight up. I'm like,
Yes.
what?
Let's go. Let's show it for the
No way
people.
you could have got in that.
Yes, it is. It is on 12. So it's yesterday at about 12:30, right? Right around, yeah.
Yeah.
1:30 was 1:30. And it actually did my play. And I just thought that candle was too big for me to jump in.
Yeah, and that's what I was looking at. I'm like, man, the way it shot up, how much it moved just in that 5 minute. Well, it really wasn't even 5 minutes. I think it was like within that first minute of the candle opening, it went insane. And I was already in a put credit spread based off of
Our strategy.
well, yeah, and then using that the DR IDR to
Yeah.
determine where the high and low is within that first hour of the day.
Yeah.
So I was like, okay, I had a spread at 39.10 and 39.05.
Mhm.
So I was good all day,
You was happy all day. Like, oh yeah.
but we didn't do it in the live account because it's like every day this week, somebody from the Fed has been speaking or whatever. And I'm like, no, I'm not playing around with them because one day it got real close to
To getting you.
yeah, and I was like, I'm not messing with them. But he didn't speak until 4 o'clock or 3 o'clock our time. And I was like, I just don't know what the market's gonna do prior to him coming on.
Right.
It might be bipolar, so I'll just paper trade it.
Okay.
And,
Yeah, you just, you go with your gut. You go with your gut. I mean, you see the play, you make the play. And then
yeah.
you feel right, like, all right, this is my play. Let me just do it. And all I
But
can
with what we talked about, once
Mhm.
we saw that jump up with the well, at least looking at your 6 and 17, that cross and it
Yep.
above that,
Cross
that could have been a good
consolidation.
opportunity to take a put spread at like 39.45, 39.40 or something like that.
Absolutely. Absolutely.
Just hold it. Even if we got out an hour later, you know.
Yeah. It would have been perfect. That would have been on a move like this. It's perfect. And as you can see, the cheat code already had you in the buy. So the cheat code don't lie. The cheat code will help you now. Cheat code have you in the buy from here. Like, so for my play, that's why I love my play, because it goes with the cheat code quite often, because it's with the trend. So the 6 and 17 cross, we had consolidation. This was my entry right here. I would hold it because my stop is below the previous low consolidation, and I could have had a nice move to the upside. Would have been beautiful. So even on this play here, getting in here, I would have been in early for this whole move. But if I missed this, I could have got in on this candle, but that was a big candle. I was nervous. I saw it too. I was like, I can't do it. I can't do it. And it actually worked out very well at the end of the day. So this would have been a great credit opportunity as well as money.
So real quick, and then I know you need to go, but on Thinkorswim, you had shown a way to look at like when you're putting in your stop loss, what the impact
The
of the
option
premium is.
price, the premium.
Yeah.
Yeah, absolutely. Let's go over to it. So let's go over to SPY. Well, we could do what you want to do. SPY, SPX, what you want to do.
I mean, it doesn't matter, it's
Just
gonna be
want to
the
see the premium. Okay.
same regardless, right?
Yeah, I'm always hitting SPY, so we'll do SPY. Let's say, all right, let's say this morning, where's price action right now? 398.99. That's a nice move up. Let's say we're going to take the 399, right? We're going to right click. We're going to copy that that strike price, that premium. We're going to go to charts, and let me take off my.
And you're copying whichever one. So
And we're going.
in this case, you're doing a
Yes,
call. You're buying a
we're doing a
call.
call,
Okay.
right? We're going to do a call. So yes, I want to copy that call premium, that strike, and I'm going to Control V, paste it in here, and so let's say we're on the 2 minute, and we're going to take a stop right below the low, right, per structure. If you look to the left here, it'll show you what that price is. So we bought it at like 180 something, that's what it was. And if we take a low, if we 1.59, 1.6, we can type that in on our stop and say, hey, if it gets to 1.59, get me out. Or you say, hey, well, I'll take it if it gets below the 50. I'll take my stop. Now the stop is on you, of course. So 150,
Yeah.
157. You say, I'm comfortable with that. I paid 180 something for it. I'll lose, 20 something cents or 20 something dollars per contract. If it gets there, it's oversold. I think it's going to push up. And all my indications are telling me it's going up. I'm good paying 180 for the price. If it gets to 158, that's $22. I'm okay with that. Then you can jump in a trade and immediately put your stop in at 1.58, 1.57. And now you don't have to think about it. You can let the trade do what it do and just say, okay, well, I want to take profits, maybe at 20%, 30%, 40%, as it's going up. If it starts to push in my direction, maybe I'm playing to the target. I think it's going to get to back up to the resistance here, this previous high. So that's where my stop is, and that's where my target is. Maybe about 3-1, 2 on 3. So that's probably like a 3-4-1 from where price action is right now. And that's a good ratio for me, risk to reward. I'm happy with that. So that's how you would do it. And you can even put it up and say, hey, look, if I got it at 1.8, right here is 2.2. You can also say, hey, take profits. You could do a what's called a one cancels other. Get me out at 0.157 and get me out at 2.24, if you don't want to watch it. And one of those two things are going to happen.
Yeah.
So that's how you would do it here on the desktop.
Okay.
And if you put, I do want to show you, if you're doing a put, right? Let's go back to SPY. If you are doing a put, you copy, right click over the ask, copy the strike price, go to the chart. So when you put in the put, it's going to actually look like a call, right? So it's going to actually look just like this image here, if I'm correct. Just here. So we're doing a put, but it inverses, so it still makes it look like it's a call going to the upside, right? Which is very weird for me. I want to see, if I think it's going down, I want to see the actual chart looking the same way. So what you would do is put a negative sign. Somebody in the chat, put me onto it, so I got to give it to you guys. So there it goes. Now it looks like the actual chart on how it's supposed to be.
Okay.
Let's go look at SPY real quick. Yep.
Got it.
Yeah. And now you can see your stop is going to be negative 248, or negative, if it goes above here, negative 287. And you pay 290 something. If it drops, you can see on the right hand side how much you're going to be making if it gets down here. So I like it. I like it a lot. That negative in front of the contract is key for me when it comes to puts. All right. Any questions, guys?
No, that's it.
Oh man. Well, thank you guys for.
I appreciate you.
No problem. No problem. It's my pleasure. Hey guys, this is the kind of stuff that you get when you hang out with us on Cheat Code. This is Screener Steve, and we're gonna push out. We went in a little bit today. We got a good hour in, so this is beautiful. Hopefully you learned some stuff. We do have the free Discord that you can come in and definitely get some great info and some great strategies that's going to help you on your day-to-day when you're trading. And the community is phenomenal. Thank you so much for coming out and hanging out with us. The link should be at the bottom, so check us out on the cheat code and see what we got for you. The Discord is free if you want to get onto the premium side. After you see what we got in the free Discord, just holla at me, Screener Steve. All right, I'll see you guys on the next one.